Dhirendra, thanks so much for joining us. We're seeing the big IPO kickoff, and it's been much anticipated. Even though they've trimmed the size somewhat due to market volatility, the big question on everyone's mind is: should they be looking to invest in the LIC IPO?
It's not a big opportunity because if it's a very small IPO than it was expected to be. Any investor should not be guided by this fear of missing out. You in the market, you never miss out on something substantial. And even if you are lucky with the allotment, then it's not a make or break situation. Because if it's a great company which should be held for 10 years, you should be buying it even after that, because in the IPO you will get a defined quantity. But let's look at what LIC is. It's a big company. When I look at it, I have been looking at mutual fund industry, and this one company is bigger than 1.5 times or maybe about 1.8 times than the Indian mutual total assets managed by Indian mutual funds. Amazing. So this is more than an industry. This used to be the monopoly, and this now it is still 68% of the life insurance business in the country. When I look at the complexion of the business, it has a lot of legacy issue in terms of the kind of policy it sells, how rewarding it is for investors. But let's look at some very basic thing. It's a large company, profitable company, being sold at a price which is close to its embedded value, which is a yardstick used by insurance companies to sell. So it might be cheap, or it may be relatively cheap, or it might be attractive. But don't rush, simply because there are just too many unknowns. One is that, I generally dislike government-owned companies. Government happens to be a very bad owner. And we have seen it time and again. But in this case, it is little different. This being an insurance company, trust is one of the critical capital of such a company. And government being the owner turns out to be a great plus. So in that sense, that is the advantage. The other is that this is not only a government company, it has promised to remain a government-owned company for all times to come, despite the public issues. So, and gradual disinvestment. So in that sense, and it's going to be very different from other insurance company. Let's look at 4 or 5 good things about this company. It's big, unhindered, unfettered trust, a sizable scale. Also, there might be a lot of latent value in many of its assets simply because of its legacy. Now, about the disadvantage, I think this is a company which sells policies. When I look at it from a consumer point of view, I think LIC is a very bad choice. And my belief is that if something is not great for the consumer, it will be a very big negative. It will be a long-term disadvantage for the company. So it entirely depends on how quickly it is able to change. And because when I look at the complexion, when I look at the endowment policy, the scale of endowment policy, or the total assets under management, the scale of annuity and life and term insurance, which should be the core of an insurance company, it is not meaningful. It is not good enough. So in that sense, investors or the policy holders will be disappointed. So it might look, there are things which might tilt the deal towards LIC, that it is attractive, it is large, it is big, and all that. But on the balance, I think give it some time, let it establish, let it establish in the public domain, and then I don't think investors are going to miss out if it's a great opportunity.
Interesting. So even if you are a policyholder, and I know you just touched upon it, you're saying even with the discount, it may not look so attractive.
Yeah, it could be a small punt, in a sense that it could be a small position of yours, but it's not going to be, any IPO does not present an opportunity for an individual investor to build a meaningful, sizable position. And, it will give you an entitlement of with some advantage. But should it be the real driver of anybody's investment choice is a question which I'm asking. No.
Okay, fair enough. And, as you said that, while there are a few things that work for it, you're not quite convinced as to whether or not it's an attractive opportunity. Is that, it may be a behemoth in the space, but as you said, is it because you're also concerned about perhaps, the kind of reporting we may see now in the public domain going forward? Is it a valuation question? If we could sort of probe that a little bit further.
No, I'm not looking at it in that greater detail. There are only two ways of looking at a company, that how attractive it is in the short run.
Okay.
In that sense, it might be little attractive. You might have little upside if you get lucky with the allotment. And, being a policy holder, you might get an advantage of, even further discount. That's one. I don't have great concerns about this company because it's a government company, and on one front, I'm very assured that everything will be credible with this company. I find such companies to be much better off in the government ownership, simply because one is you have a statutory auditor, you have an internal auditor, and then you have CAG on top of it. So there is unlikely to be a complete nasty surprise coming from LIC. Then comes is it going to be a great company for the long term? That is something where I have great concerns.
Why is that, Dhirendra?
Yeah. It has nimble, smarter, modern competitors.
Yeah.
This is too big. So less maneuverable. Too much of legacy. And that is something which is very hard to change, and it will change gradually. Its products are not investor friendly.
So, the way that if we were to club it into a basket, I mean, would you put it and compare it versus insurance peers? Would you compare it to other fund houses or wealth managers? Which basket would you put it in? Because if an investor was to look to track returns now the next few months to see if there's any merit in investing in it, how should they compare it to other players?
No, it will remain a profitable company from a shareholder point of view. If I'm a shareholder of LIC, I'll be well off. But I think, one has to, for any corporation, it has to find a balance of, its customers' benefit, and more so in financial services. If you become profitable, if you become big, if you are the largest, if you're the government owned, if you have been a monopoly till about 15 years back, then, if you are very profitable and your consumers don't benefit, if your policy holders are not, and now they have a choice, that I think is not a great long-term sustainable story. Short term, yes, it's attractive. It might be attractive stock, or there is one more thing about the negative thing about the short term, that LIC will be gradually, the stock of LIC will be gradually disinvested. So you will have supply coming in at periodic, periodicity, at defined periodicity every year. So this is not going to be the last opportunity.
Okay. What, according to you, is a good price band for LIC? If not this time, then next time.
I don't know. Price is in the, lies in the eyes of, beholder, so to say. So in that sense, it's all wide open. And I don't think we have comparable benchmarks to really look at it.
Okay. Always a pleasure speaking to you, but at least
my pleasure. My pleasure.
Okay. All right. Bye then.
If you like the video, do like, comment, share and subscribe.